investors still seem to prefer muni bonds over stocks, at least. Is that what you're seeing, and is that what you expect to continue to trend in 2013?
Well, I would like to say yes. I would like to have a more sanguine outlook on the muni market in 2013, although I think we will perform adequately. I think our the large amount of performance has been squeezed out of the market, and it's pretty obvious for anybody who's looking at the marketplace to see that yields are at or pretty close to all-time lows. Spreads have contracted, so the opportunity that was there a year ago has already been realized. So now we're looking forward to 2013 to, as they say, clip the coupon, get that 4 or 5% return out of munis in this coming year, and I think that will be a successful year.
4 or 5% is still decent. When you look at last year, the S&P 500 only gained 2%, and that was all attributed to dividends. How are taxes going to impact the muni market? How tax policy in 2013?
Taxes could have a huge impact. And of course, avoiding taxes is behind the acquiring of tax-free bonds in anybody's portfolio. You don't want to pay taxes on the income. Well, if taxes go up, personal income taxes go up, or if there is some combination of higher taxes and a cap on deductibility of certain items, and munis have been mentioned in that context, that will have an interesting dynamic, push and pull, if you will. Higher taxes lead to better opportunities for munis outright. Cap could have a somewhat dampening or offsetting impact. So whichever occurs, there will be a commensurate response in the muni market.
We spoke a couple months ago in early October, and at that point you were kind of bullish on the high yield munis. Do you still feel that's a good play for 2013?
I still do. I absolutely do. And part of the reason is that the spread narrowing I mentioned just a couple of moments ago hasn't fully played out in high yield. So there is opportunity for total return performance in high yield. Point number one. Point number two, we've had a bit of a correction in the marketplace very recently. And yields for some of the popular high yield products that you will find, whether in my ETF or other high yield funds, have risen. And that means that there are more compelling reasons, given the long range outlook for interest rates, more compelling reasons to be in high yield.